Welcome everybody to 15 Minutes of Finance, where in the next 15 minutes, I'm going to get you excited about investing. Let's do it. All right, guys, it's Friday. The stock market has finally ended positive. Obviously, we're near all-time highs, so that's me being hyperbolic, but it's exciting since it's green, it's red, it's green, it's flat, miserable. Trump will send a tweet out, stock markets will go berserk, usually negative. He'll walk it back, then it goes back into the green territory. I'm exhausted. And one of the biggest, just like I would say suckiest parts of my job is we'll get a new client. And for example, I'll give you this actual client. Client comes over, they're getting a settlement. It's going to be about $800,000 that we're investing for them. Okay. They get it. They've never had any money to invest before, right? They're like excited. We can't wait to invest. We heard about you from our pastor. Like we heard you're one of the best investing firms out there. We'd love to work with you. We get them. They come over. I walk through the entire process with them. Hey, this is what risk looks like. This is kind of where you fall on the risk profile. How would you feel if the stock market went down 20%, et cetera, et cetera. Walk through everything with them. And they're like, yep, we want this money to grow. We don't need this money. This money is for 20 years from now. Great, right? Dream client. Well, we put them in honestly, it was probably like 50% treasuries, just a 3-month, 4% treasury, like very consistent, dependable. We're at all-time market highs. Why would I dump them into our growth portfolios? I take about, $100,000, maybe $150,000, and I allocate it amongst a few growth positions. China tariff talk comes out. The portfolio drops to $788, right? So $12,000. Grand scheme of things, not that much. It's like 1.5%, less than 1.5%. Client is like absolutely depressed. Like, it's so hard to look at the money go down day after day after day. And I'm like, oh, geez Louise, that is the worst possible case for me as an investor of other people's money. And now I'm like, all right, look, let's hop on a call on Saturday. I'll walk you through everything. Turns out your risk profile isn't what you told me you thought it was. You're not very eager to have growth be the main mission because we don't even have that much money invested. Most of it is in guaranteed treasury returns. And here we are concerned about less than 1% of the overall portfolio. So going to have that call tomorrow. Not going to be the best call in the world. But I lose sleep over that stuff. I want people to be excited and happy about their investments, right? Hold on, I got something in my eyeball. So I'm going to have to walk through, hey, this is why we're doing this. This is why we're in these positions. Okay, give this position 3 months, right? So one of the things we're in is SoFi. We invested at 28, it went down to 25. Right now it's back up near 28. What is the volatility of this stock? That's a stock I would tell them I wouldn't want to sell that at all. I love SoFi. SoFi is a great stock. They have earnings coming up. When are their earnings? Let's look at SoFi's earnings here. So I have airplane mode on. Can't be distracted, right? That's why we have airplane mode. It's at 26.82. So we're at 27 almost. And earnings are on the 28th, October 28th. Come back here. Okay, we'll come back here near or after SoFi's earnings and see what happens. I think we're going to be blown away by their earnings report, and I can't wait to read the 10Q. But anyways, just going back into that strategy of like, man, I get new clients. We get new clients at all-time market highs. People don't really know what their risk tolerance is and what they're capable of feeling. And I'm only bringing this up because if you guys are watching this as someone who uses an advisor, or even if you do your own investing, a lot of the time, the best thing you can do is just wait and do nothing. And that oftentimes is the hardest thing to do, right? Because when we have down days and Trump says a negative tweet about China and the market drops 4.5%, we want to do something about it. And this is so far out of our control that the best thing you can do is wait, do nothing. And it is oftentimes the hardest thing. Okay, anyways, that's my rant, my lesson for the day. Sometimes waiting is the best thing you can do. Anyways, the client, I am sure, is going to be very, very wealthy in 10 to 15 years at $800K. Our plan is to see that thing absolutely skyrocket, even with only a little bit of invested and most of it in guaranteed return in treasuries. All right, let's talk about the news today. It is Friday. We cover the news. Let's jump into it. Stocks advanced Friday afternoon as investors shook off concerns about the health of the banking sector and mulled comments from President Donald Trump about threatening extra tariffs on Chinese goods. The Dow Jones Industrial Average, S&P 500, and NASDAQ were up a respective 0.7, 0.6, and 0.5% in recent trading, a day after indexes fell as volatile trading continued. Regional bank stocks sank Thursday with the Spider S&P Regional Bank ETF falling 6% after Zion's Bank Corporation, ZION, said it was taking a $50 million third-quarter charge to cover a pair of loans taken out by borrowers facing legal actions. Zion shares ended down 13%, while those of fellow regional bank Western Alliance Bancorp, ticker WAL, sank 11% after it said that in August it initiated a lawsuit alleging fraud by one of its borrowers. Zion and Western Alliance shares have been lower overnight but reversed course and were up roughly 6 and 2.5% respectively in recent trading. Stock futures had pointed sharply lower Friday before Trump said in a Fox News interview that the U.S. was going to do fine with China. That was better. That one was better. And that his proposed 100% additional tariffs on the nation's goods would be not sustainable. The 10-year Treasury yield, which influences borrowing costs of products like mortgages, closed trading yesterday at 3.97%, its lowest level since April, and slipped as low as 3.93% Friday before rebounding to 4.01. Amid market turmoil and a U.S. government shutdown in its 17th day, gold continues to be a safe haven. Futures set their latest record high at 4,392 early Friday, although they pulled back 1.2% in recent trading to 42.50. Bitcoin was at roughly 106,700, off an overnight high of 109,200, and the U.S. dollar index, which tracks the value of the greenback against a basket of foreign currencies, ticked higher to 98.41. West Texas Intermediate crude oil futures rose 0.1% to 57.55, and U.S. listed shares of Novo Nordisk, this is important. U.S. listed shares of Novo Nordisk fell more than 3% after President Trump said that the cost of the Danish pharma firm blockbuster weight loss drug Ozempic will be much lower soon. Shares of U.S.-based rival Eli Lilly, which makes weight loss treatments, Zepbound and Mounjaro, also were down roughly 2.5%. Oracle stock sank 6.5% even though the firm issued a rosy long-term revenue and profit outlook yesterday, as the database software giant did not provide updated capital expenditure plans. Okay, so why is Novo Nordisk important? Also, guys, I clapped. I know that was probably loud. My bad. One, because we own our statements here. We own our claims. About 2 years ago, we liked Novo Nordisk. We added it to our list of stocks to watch for 2023. Was not a good pick. It was actually our worst pick. It was our only pick that was in the negative. I don't know what happened with Novo Nordisk except for the fact that they were very successful with their weight loss drug initially because it was such a revelation, such a big deal, and then all the other players got involved. And so we took them off in 2024, which was a very, very good decision for us to remove them from our stocks to watch list. But the reason this overall is important, I'm only bringing all that up so that you know when we make claims, we own our bad takes and we own our good takes. It's very important that you get investment advice from people who do that. Otherwise, who's responsible? Right? There's no responsibility in any of these claims in the finance world, and I don't like that. So if you do like that, hit that follow button, hit that subscribe button, and share this with somebody and give us a nod or two, okay? But why this is important now is because a stock that we have watched all year and some of last year, HIMS, right? HIMS and HERS, ticker HIMS or HMS. I should know the ticker. Guys, I'm very blonde most days. I want to let you know that. And I am much better early in the mornings. We're talking 4 a.m. HIMS, HIMS. So HIMS is going to be offering these GLP-1s or semaglutide, whatever the compound is, for significantly less. Okay, significantly less than the direct-to-consumer Novo Nordisk or Ozempic or whatever, anything you can get at the actual pharmacy, they're going to be sold for significantly less. And what's going to end up happening with that is people are going to get Hims and Hers subscription. And what they're also doing now, so this gets into a little bit of medical discussion. So don't take my advice to buy any Ozempic weight loss drugs, okay? Go speak to your doctor, do your due diligence, all that. As an investment piece, though, investing in Hims is why I think it's a positive, and it's absolutely one of our favorite growth companies, is they also do HRT, which is hormone replacement therapy. They do it for women, and they also do it for men. And what ends up happening with this weight loss drug is when you start getting these checkups, right? Because what they'll do is you'll go to hims.com, Hims and Hers, and you'll get matched up with a doctor. They'll walk you through your situation, and they'll give you the drug. Once hormone replacement therapy becomes much more modernized and systematized on through Hims, that is going to be a very popular addition or replacement for the Ozempic weight loss, because a lot of people's weight issues come from hormone imbalances. Okay. And the only reason I know that is because I'm deep in on Hims, and I'm looking at their business model and what it is that they really want to get in on, as far as the online medical pharmaceutical distribution channel. And it's the weight loss drugs and it's the hormone replacement therapy. So those could each be billions, if not trillions of dollars markets in the next 5 to 10 years. Especially because who knows, I'm a millennial. I'm sure I'm filled with microplastics to the nth degree. I'm sure I'll look into hormone replacement therapy in the next 5 to 10 years. I think it'd be helpful for all of us. I know people who get on testosterone and they said it changed their entire life. So anything to help him stock out, right? You know, if I gotta get on HRT, I gotta do it. I gotta do it for the stock. But that's one of the reasons we really, really like them. So as I can see that Trump is wanting to lower the pharmaceutical costs of these drugs, Hims is standing to benefit from that because they're already looking to lower these costs, right? They want to outpace and sort of outplay Novo Nordisk and Eli Lilly. They want to push them out of the market because they're robbing people with the cost of these drugs. Absolutely egregious. In some cases, it's like $200 a week, right? No, that's not going to work. That's evil in most cases. Anyways, guys, that is it for today. I hope you guys learned something. As always, invest early, invest often. We'll see you next time.